So, good afternoon. How are you all? Good. So, now let us start with income tax. Okay, 50% was GST, 50% is income tax. Now, this is like one of the most important subject at your CA inter level, or rather as a CA. This subject is very critical. Income tax. Okay, tax on income. You have just now in GST you have seen tax on consumption. Now you want to tax on income. Okay, GST shared revenue of central and state. Income tax 100% revenue of central government. Okay, more you consume, more you paid in GST. In income tax, the tax will depend on income. More you earn, more you will pay. Getting it? More you earn, more you will pay. So it is a tax on income of the assessee. Tax on income of the assessee. So today's session is dedicated to understanding very basic concepts of income tax. Okay. So first of all, taxes. We can divide taxes in two parts: direct and indirect. Direct tax, income tax; indirect tax, GST. Okay, so in your provisions and concepts book, please make a mention of this. So now not much discussion on GST part. So just focusing now on income tax. Okay. So what is the basic feature? Its levy and burden is on same person. You have seen in GST burden was passed on to the end consumer. Here no passing off of burden. It is my tax, I will pay that tax. That is income tax. You cannot pass on burden to anyone. It's not possible to pass on the burden. Okay, so levy and burden of income tax is on same person, and income tax is covered in union list. Union list. Okay, GST was there in concurrent list. Right to collect GST was of center also and state also. It followed dual model. Not in income tax. In income tax, it is the right of Union of India. So whichever state you are in, wherever you are paying income tax, whichever state you are earning the income, doesn't matter. Tax goes to Union of India. Okay. So it comes in union list and it is revenue of central government. Income taxes revenue of central government. Got the point? Okay, so this I have tried to show you. This is your income. Of that, some part will go to government. Out of out of your income, some part will go to government. So out of 100, say 25 goes to government. You can enjoy only 75. Just as an example. Not exactly 25. Clear till this point? Fine. So, body of income tax law. You have seen body of CGST, body of GST, CGST Act, various states, SGST Act, UTGST Act, IGST Act, and notification circulars. Accordingly, what is the body of income tax law? So it will be Income Tax Act, Income Tax Rules. Okay, so whenever in the act you find the word as prescribed, you will have to come to Income Tax Rules. So Income Tax Act, Income Tax Rules, Finance Acts. What is the role of Finance Act? Big role Finance Act has to play. See, which year Income Tax Act is framed? 1961. Do you expect 1961's law and today's law to be same? It's impossible. The way of doing business has substantially changed. So law has, of course, law has to change. It is very dynamic. So many changes happen in the way of doing business. For example, uh, derivatives market. Derivative market was not so developed. Forget derivative market. Stock market was not so much developed in 61. So how can you match 1961's law and 2024's law? So what Finance Act does is Finance Bill proposes changes to the Income Tax law, Income Tax Act. That's why every time you see people, businessmen especially and salaried people glued to television on the budget day. Because in budget, in annual union budget, which budget it is? Union. Because right to make changes in the income tax law will be of at the union level. So it is finance bill, and in finance bill they propose changes to be made to Income Tax Act 1961. So what happens in the bill? There is annual union budget. When this budget happen? In the first week mostly of Feb. So in first week of Feb, they will propose changes for the upcoming financial year. Means for example, now forget this year. This year there was an interim budget. You know what is interim budget? This is the election year. So suppose take example of 2023. Suppose on 1st Feb 23 there was a budget. So what exactly is the budget? So budget is nothing but estimate of incomes and expenditure. But as a part of budget, there is one thing that is proposed in both the houses of parliament, that is called as finance bill. Finance bill will be presented, okay, which will propose some changes in the Income Tax Act, and which will propose the rates of income tax for upcoming financial year. So in Feb 23, which was the upcoming financial year? So 23-24. After Feb 23, which financial year will start? 23-24. So budget of 23 will give changes for upcoming financial year, that is 23-24. Getting it? That is 23-24 financial year. So the rates of income tax for 23-24 financial year means whatever you earn in 23-24, at what percentage it will be taxed will be discussed in finance bill of 23. This is most important thing to understand. Okay, and what you earn in 23-24. See, GST was we have to see GST from a very different lens. In GST, what happened? I have sold the goods. On the goods, this is of 10 rupees. There is GST on this, say of 18%, and the transaction is over. There was a time of supply. There is the value of supply, time of supply, transaction is over. But in income tax, it is not each transaction wise. Will you calculate income transaction wise, or will you calculate income for particular time span? Getting it? You make a P&L account. What is the heading of P&L account? Profit and loss account for the year ended. So basically that gives you NP for particular time span. It's very difficult to find out profit on each transaction. So this income tax is not transaction wise. This income tax is for particular time span. That time span in India is financial year, which starts from 1st April, ends on 31st March. This is a typical span for which income is calculated. See, it could have been calculated monthly also, half yearly also, quarterly also, but what they have selected? Yearly. And that is that is how basic I should understand. So 23-24 financial year, for that what should be the rates of tax will be decided in the Feb 23 itself. Getting it? So ideally for 24-25 it should be decided in Feb 24. Getting it? For 22-23 it would have been decided in Feb 22. Got this cycle? So now you will understand. Income Tax Act is of 1961. Can those percentage continue today also? Impossible. There has to be change in percentages also in many factors. So percentage will be decided year to year basis. So when you become CA, when you start practicing, you will have to refer latest Finance Act for the percentages. That is for sure. You'll have to refer latest Finance Act. But of course, what basics you learn right now, they will remain 85 to 90% same. So what you learn is not waste. See, what I learned in 2006 is relevant today also. But is it same, dicto same? The answer is no. But was it a waste? Answer is absolutely no. What I learned in income tax in 2006 when I was doing CA intermediate is still relevant. 2008 rather, not 6, 2008. It's still relevant today. Okay, but of course with amendments. Okay, so understand. So yes, what is the importance of Finance Act? Finance Act will give you rates of GST, rates of income tax, and Finance Act will change, will have right to change Income Tax Act some provisions by way of amendments. So it can propose some amendments to original Income Tax Act. Okay, today I think net is not connected, but when net is connected, tomorrow I will show you incometaxindia.gov.in, the website, official website of income tax. On that, how you can search section wise Income Tax Act. Why I want to show you that is, suppose there is section 15 saying that salary will be taxed. Okay, then if I select Income Tax Act 1961 section 15, then there will be one more drop down list, as amended by. Then you have to select the Finance Act. Okay, not necessarily every Finance Act there will be change, but there might be change. Getting it? Okay, so as we go ahead you will understand in better way. So which financial year I am giving you example of? 23-24. So for 23-24 financial year, which Finance Act will bring the change? 23. 23. Because it will be passed in Feb 23, whether it will be proposed in Feb 23 for the upcoming financial year, that is 23-24. Okay, now what I am telling you is probably most important. Listen carefully. The financial year in which income is earned is called as previous year. What it is called as? Previous year. Never forget this. Never ever forget this. Year in which income is earned is called as previous year. Okay. Now see, I'm asking you one question. Today's date is 21st April 24. Which previous year we are sitting in? Let me see how much you have understood. So don't connect this with English. We are sitting in previous year 24-25, not 23-24. You all connected this with English. Previous means you thought preceding. Previous, see today if I win lottery, that will be considered as income of which previous year? 24, 25. Bus. This I have to understand. If you understand this, then that means you have understood the PY concept. I am taking this batch starting 21st April, which will end on 7th May. So I will do billing to your classes. I'll do billing to the classes and I will get fees from them. So that fees will be earned for me. For which PY? Clear? 24, 25. So actually, in accounts, you have been doing accounts from last so many days. In accounts, what you call as financial year, I am calling that financial year in which income is earned as previous year. What is the logic? Logic is now it's not like GST where I immediately do the calculation. What I will do, I will wait. I will do post-mortem. I will wait till 31st March 25. And after 31st March 25, I will calculate my income and tax for the PY 24-25. When can I exactly calculate my income of financial year 24-25? Only after financial year is over. That is in the next year. So that next year in which income is assessed to tax is called as assessment year. So there are two concepts here, PY and AY. PY, AY. PY, AY. PY, AY. Now listen carefully. If 23-24 is the PY, then what will be the AY? 24-25. Now, next question to you is, if you are giving exam in November, if you are giving exam in November 2024, now forget exam, you are having office and the client approaches you in November 24. A sum is equal to client. So client comes to you in November 24 and asks you to compute his income and tax for the latest completed previous year. So which is latest completed previous year? In November 24, which is latest completed previous year? Which is latest completed previous year? 23-24. And AY? Don't forget, this is AY applicable for your exam. Because your question in the exam is your client in your office. So he will come for the latest completed PY, which will be PY 23-24, which will be AY 24-25. So which will be corresponding to Finance Act 23. So if anyone asks me, which is Finance Act applicable for my November exam? Which is Finance Act applicable for my November 24 exams? So which is the Finance Act applicable? Finance Act 23. All amendments made up to Finance Act 23 is applicable. So that's why, in a calendar year, whatever CA exams are there, even if they introduce September, May, assume September, November, January, whatever, January, May, September. In a calendar year, I am saying. So in a calendar year, you will have, let's not introduce that September issue right now. It's not yet finalized. Assume May, November exams are there. For May and November exams, in a calendar year, applicable Finance Act will be same. Means if someone is giving exam in May 25 / November 25, then which is the PY applicable? PY applicable is 24-25, AY 25-26, Finance Act 24. Clear? So this way you have to understand. This cycle you have to understand. Okay. So see, what is body of income tax law? Income Tax Act income tax rules, various finance acts. Okay, that's why I've said finance acts. Why finance acts word is used? Maybe some change was done to original income tax act by Finance Act 19. To particular section, change was made by Finance Act 19. Now that is also applicable for you. What is applicable for you? Income Tax Act 1961 amended up to Finance Act 23. In 24 also there was one budget, but that budget is not applicable to you because you have PY 23-24, AY 24-25, that is all amendments made up to Finance Act 23. That's it. If you are giving May 25, November 25, then what will also become applicable? Amendments made by Finance Act 24. That way. Understand this because many students just study without understanding applicability only. And if you observe in GST, there is no concept of PYAY because GST is each transaction wise. Once transaction is done, GST is applicable depending on time of supply. So you know GST of this month, whatever time of supply is in this month, you will pay GST by 20 of next month and end it. So actually GST is each transaction wise. But income taxes for a span of a year. Got the difference? Then what is body of further notifications issued by central government? When you see the word as notified in the Income Tax Act, decided cases by Honorable Supreme Court, and circulars will give clarifications issued by CBDT, Central Board of Direct Taxes. You have seen in GST there were notification issued by CBIC, Central Board of Indirect Taxes and Customs. Here there is CBDT. Completed till this point. Done till this point. Just make sure you have understood what is concept of PY, AY, importance of Finance Act, and applicable PY, AY for your exam. Shall we go ahead? Shall we proceed? In GST, there was no concept of assessee, but there was a concept of taxable person. Taxable person was the one who is registered or liable to be registered. That was basically your taxable person. But in income tax, we have concept of assessee. So who is assessee? Assessee means any person who is liable to pay tax. So if you ask me that you all students, are you assessees? So maybe the answer is no. Because are you liable to pay tax? Are you liable to pay income tax? No, because you are not earning income. So you may not be assessees. So assessee means any person who is liable to pay tax. And underline person, because who is person? Even temples, trust can become a person. Even deity can become person. It's not necessary person should be natural. Person can be artificial. Even company will become person. Firm. So note down who will be persons. Individual, HUF, company, firm. Who is assessee? Any person who is liable to pay tax. Very deep definition. Very deep definition. Who is person? Individual, HUF, company, firm. Listen carefully. You have learnt accounts. In accounts, you have learnt that sole proprietor and his firm, sole proprietary firm, are to separate, isn't it? But here we will learn they are one and the same. Means suppose name of my business is Zest Learning. Name of my entity is Zest Learning. So Zest Learning and CA Pratik Neve is one and the same. We have got same pan. We have got rather it's my profession in the name of Zest Learning. Getting it? So whatever Zest Learning earns is actually my income. So Zest Learning is name of my profession. That's it. There is no separate pan. Individual and his sole proprietor is one and the same. But on the other hand, if me and my friend starts a firm, partnership firm, then is it same or is it separate? It is separate. Why it is separate? Because definition of person includes individual, HUF, company, firm. So firm is separate and individual is separate. Hindu undivided family is separate and individual is separate. Okay, so I want to show you one thing. At this moment, I am carrying two PAN. PAN means what? Permanent account number under income tax. So if you observe, this is my personal PAN. This gives me identity as a assessee in income tax. Who is assessee? Person liable to pay tax. So this is in nature of individual. You can see my photo. Okay. So it is an individual span. Okay. Now this is PAN of my HUF. So on this written is Pratik Neve HUF. And you can't see any photo. HUF can't have a photo. Artificial person. Getting it? But how can I have two PAN? I am Karta of this HUF. So I can have, means I will have I can keep this PAN legally. So legally, how many persons? Two. HUF is separate and individual is separate. If I start a partnership firm with my friend, then that will be new entity. That will have a separate PAN. If I am director in one company, then company is separate. Company will have different PAN. Each of them can earn income themselves. That is what Act is trying to say. Each of them can earn income themselves. Getting it? So see, individual, HUF, company, firm, association of persons. What is difference between firm and association of persons? What is difference between firm and association of persons? Association of person means multiple companies can form association. Means two companies entering into type of partnership is a AOP. Is it association of individuals or is it association of persons? Persons, and persons can include artificial persons also. Their association. Okay. Body of individuals, cooperative society, any other artificial juridical person. So which is the local body here? Which is the local body? That also will be person. Getting it? Local body means, tell me which is the municipal corporation here? That municipal corporation will also become a separate person. Why it will become a separate person? It is taking municipal taxes from you. So it is having its own income and it is having its own expense. So it will have its own earnings. On its earning, it might have to pay tax. Getting it? Suppose we talk about Tirupati Balaji deity, which is under a trust, TTD. So TTD will become a separate person, which may become liable to pay tax. Getting the point? So that is the importance of person. It will be having its own PAN. Okay. So see, this is importance of word person. Then concept of PY. We already discussed concept of PY. So write down concept of PY. PY is the financial year in which income is earned. It starts on, usually means, see, it starts on 1st April and it ends on 31st of March. So which is the current previous year? English wise the question seems incorrect. Current previous year. But income tax wise the question is correct. So when I had made these notes, it was date was 7 December. So I've written it here 7 December. You can change it. For us the date is, for us the date is 21st April 2024. So which is the current PY? 24-25. Got it? What is meaning of word assess? Assess means what? Assess means assess. Assess means check. Assess means determine. Assessment means, see, if I take your test, if I take your mock test, and then I tell you that these are the model answers, you only check yourself. That is self assessment. Okay, if we check your papers, then that is not self assessment, that is assessment by examiners. So, assessment means what? Basically, determination of your performance. Here, what is assessment happening of? No, no, means here in this case assessment is happening of income earned and taxes payable. When is that assessment happening? The assessment is happening after the previous year. So what is assessment year? Financial year immediately succeeding previous year. It is a financial year. Assessment year is financial year immediately succeeding the previous year. Succeeding means the one which follows. Got the meaning of AY? Do you all have PAN? But you have PAN, but still maybe you have not become SSC. You have got PAN, but you have not become SSC because you are not yet liable to pay tax. You are not yet liable to pay tax because you are not earning sufficient income. Not earning only. Okay, not earning income. You may be having some FDs and all, I don't know. So maybe there is some income, but that is not sufficient. That is not crossing a one limit. So only when income crosses a limit, there will be tax. Okay. So that's why you all are may not assessees. So right now you're not assessees, you will become. So assessment year, financial year immediately succeeding PY, it is that FY in which income of PY is assessed to tax. Many people feel that uh, in AY tax is paid. See, maybe partially correct, but AY is not the year in which tax is to be paid. It is the year in which tax is to be assessed. So you will get confused then when it is paid. See, listen one thing carefully. There is a prepaid system of taxation. What I am telling you might confuse you because first I told you that you cannot calculate your income in the PY. Income for the PY will be calculated in the AY. Absolutely right. But you have to pay in the PY itself on estimated basis. On what basis? I am not saying कि your estimate cannot go wrong. It can go wrong. But you have to start paying tax for PY in the PY itself. So we don't follow postpaid system. We follow mix of prepaid and postpaid. Agreed that my exact income and exact tax will be calculated in the AY. But I can start paying in the PY on estimated basis. I know now that how much my income could be. That I know I'm not blank. I know how much my income could be. So I will have to start paying tax for the PY in the PY itself. But exact tax, how much it is, will be calculated in the AY. But I will start paying in the PY. Okay. So what is AY? Why I'm telling you this right now? Otherwise, you will make a general statement that AY is the year in which tax is paid. I don't want you to say tax is paid. When tax is assessed or tax is determined. Understood? So see, can I give you this example? Right down, actually I've already given you. So for PY 23-24, AY will be 24-25. So your exam date May 24, whatever, November 24, December 24, whatever. Calendar year 24, if it falls in. So what question you will ask if your exam is in May 24? You will ask yourself, which is the recently concluded PY? You will get the answer 31st March 24 means 23, 24 is the recently concluded PY. So AY will be 24, 25. Next 16, 17 days, you will just do calculations, calculations, calculations. Lot of calculations you will do. More than GST. Much more calculations than GST. Every minute of the class you will be doing some calculation only. Okay. At least 200 provisions you will learn. See. Done. So, what is the role of Finance Act? What does Finance Act do? Finance Act has two responsibilities. One responsibility is giving you rates of tax, and second responsibility is amending provisions of Income Tax Act. You will be surprised to know if I tell you the income tax actually drives the whole economy. It is not only medium of collecting tax for government, income tax. It is about conveying to the people what government wants. I'll tell you how. What I'm saying, I will try to tell you. Have you heard of PPF? Public Provident Fund. So what is PPF? It is a post office scheme. It is a post office scheme. Of course, you can open now PPF account with various banks. I'm not saying no, but originally what it is? A post office scheme where you can save money. How much? Up to 1.5 lakhs in a year, on which you will get interest. Assume government wants to promote PPF. Government wants to tell you to make PPF account. How they will tell you? By writing you letter. Please open PPF account. It is beneficial for you. No one will listen. But government said that we will give you discount in tax if you open PPF account. How discount in tax? Whatever amount you deposit in PPF, from your income earned, we will minus it and then calculate your liability. So what happens? Automatically, many people who are earning good income will run after doing PPF. So government has clarified their intention that we want to make PPF famous and we want individuals to deposit money in PPF. This is just one small example. Getting my point? So Income Tax Act actually, as a CA student, you should understand, it is a strong statement done by government. Every finance act, government makes a strong statement that how we are going to drive the economy in the coming year. Means, for example, now they are saying, okay, your batch is revolutionary batch because now they have got one way of paying tax where they say for so many years we have been getting deduction of this PPF amount which we deposit used to get minus from our income. Means if I've earned 20 lakhs and out of 20 lakhs I deposit 1.5 lakhs in PPF, then I will be taxed only on 18.5 lakhs. So I will save my tax on 1.5 lakhs. Getting the point? But why I'm saying your batch is revolutionary, because now they have got some another way of paying tax. That another way of paying tax is you will not get any deductions of these investments. Means what government is slowly trying to say, we don't want these investments to become important in your life. Slowly they are trying to say that. Okay, so we'll learn that. But what I'm trying to tell you right now here is any finance act will tell you intention that government is trying to set forward. So now looking at the new regime of tax, which I'm going to explain you, there is very less importance given to deductions. Means very less importance given to such investments. So now government is saying if you want to invest, you invest. We are not going to give you benefits of tax. So slowly they want to shift your attention from PPF to stock market. Now don't go for PPF investment. Or you may go, but will not give you tax benefit. Or there is one more example, mediclaim means health insurance. If you pay health insurance premium, you get deduction under 80D. Means you used to get deduction under 80D. Means government was saying everyone should have health insurance, so that if there is any hospitalization, then their hospitalization expenses are secured. So that was intention of the government. But suddenly now they have removed that benefit. That means no longer that is the intention. Okay, or another example I will give you. You are still, I mean, this is very early for you to understand what I am saying, 100%. But slowly, steadily, as we go ahead in this batch, you will understand. There are some businesses which, if you do, government is happy. There are some businesses, if you do, government is happy because no one is ready to invest there. And that is important from, that those businesses are nationally important. Infrastructure business. Like, most simple example, setting up of hospitals with 100 beds or more for patients. So government wants investment in this. Example of 2-star or above hotel of 2-star or above category. Government wants investment here. You will say hotels, why are hotels important? Hotels are important. If India had G20 presidency, then we have to host so many countries, top level ministers. So there have to be hotels, right? If you want to have some national games, international games in India, if we are dreaming of hosting Olympics, we should have hotels. Hotels are part of infrastructure. So point is, these are long gestation projects, means they will need huge capital investment. So many industrialists may not be willing to invest here. So government comes with some tax benefits. So when tax benefits are given in this sector, what will more and more industrialists do? They are seeking where to invest money. So they will seek such type of business. So how did money flow in these businesses? By way of income tax, because there was an income tax benefit. Because don't you think every industrialist would like to have PAT on a higher side? What is PAT? Profit after tax. Because actually PAT, from PAT only you get dividend, and from PAT only amount goes to reserves. So everything depends on PAT. But how do I get PAT? PBT, profit before tax minus tax. So that minus T, that T element should be minimized. So every businessman will be after minimizing that T tax. Getting my point? So government will try to, tax is a remote control in the hands of government. They will operate businesses by tax. Wherever government wants people to invest, in simple language, wherever government wants people to invest, they will give heavy type of deductions and incentives in tax. Getting it? And there the businessmen will be automatically, for example, startup culture. If startup culture has to be promoted, then we will give lot of deductions benefits to the startups. That's it. Automatically startups will increase. If government wants more and more people to do business in a structured way of company, then rate of income tax for company will be kept less. So in which direction our economy has to go, that particular point can be driven by income tax. So that's why one of the main part of budget is income tax. Getting it? Otherwise you will feel what is the relation between budget and income tax. Now government's one of the source of revenue is income tax. That is also one of the reason why you have in budget income tax. Means finance act as a part of the budget. Getting it? So just don't feel that income tax is limited only to government's income collection. No, it goes. Its scope is much beyond that. Your whole economy actually is running because of these provisions of tax laws. Okay. So what is the role of Finance Act 23? So what will Finance Act 23 do? Acha. So there would have been annual union budget in Feb 23 that gave rise to Finance Bill 23. Finance Bill 23 became, how does bill become act? Bill will be proposed in both the houses of parliament. Bill will be proposed in both the houses of parliament, and then it will be given assent by President of India, and then it will become Finance Act. So what is the role of Finance Act 23? Huh? Okay, okay. So I should scroll up further. Sorry, sorry. 1 second. Huh. So in our context, what is the role of Finance Act 23? It must have done two things. It must have done some amendments to Income Tax Act 1961, and yes, secondly, which rates of tax? Normal. Why I'm saying normal? Can anyone tell me? I'm not using any word like that only. I'm saying normal. I could have just said rates of tax, but am saying normal. Why I'm using the word normal? You must have heard winning from lottery is taxed at flat 30%. Winning from lottery is taxed at flat 30%. This is a special rate. Special rate comes from Income Tax Act and normal comes from Finance Act. Special is always fixed unless Income Tax Act gets amended. There are some special transactions on which rate of tax are always fixed as per Income Tax Act. Means if today you purchase lottery ticket and win lottery of 1 lakh, then you cannot say that Finance Act has said no tax on first 2.5 lakhs. You cannot say that because those are general rates of tax. But for winnings on lottery, what is applicable? Special. Special. You will be taxed at flat 30. Flat means out of that 1 lakh, you'll have to pay 30,000 to government. That is flat. So this was the example of special rate. Now which rate comes from Finance Bill, Finance Act? Normal. And special? Income Tax Act. So for example, this 30% which I told you comes from section 115 BB of Income Tax Act. BB nahi, BB 115 BB of Income Tax Act. Getting it? So that is the source. Is it clear to all of you till this point? Understood? Shall we go ahead? So what you should write here? One word you should write here. Write the word here. Normal rates of income tax for PY 23-24. That is AY 24-25. And now you know in 24, this 2024 Feb, there was an interim budget. Do you know what is interim budget? Interim budget means this year government could not give a full-fledged budget because government will change now because of elections. Correct? So they could not give a full-fledged budget for the full financial year. That's why they give interim. Like there's an interim dividend in accounts. Interim means what? Between two financial years. In between. Correct. So one is final dividend, one is interim dividend. Correct. So interim dividend means which is not for the full financial year. That way this is which budget? Interim budget. So now, believe me, in July there will be another budget. But you don't follow those changes. Because for you applicable is, then I know you will search me and you will message me. In spite of I am telling you, still you will message me. So what we will do with these changes? Will you again come to teach us? So answer is no. For you applicable is Finance Act 23 full stop. After Finance Act 23 what happens is not important for you. In your May and November, which exams? May and November 2024 exams. It's not important. Even if you give Jan 25, still it's not important. If at all exam is there in Jan, assume. Still it is not important because what a question you will ask, which PY has come to an end recently. So answer you will get is 23-24. Okay. But if you give May 25, then I am not responsible. If you give May 25, then finance bill will be 24. Then all those interim budget and main budget and everything you sort out. But every time we keep on doing amendments also. On YouTube we keep on doing amendments. Okay, so you don't have to worry even if you say do this class of 24-25 AY, but you want to give AY 25-26. Then what to do? Watch my amendments. For 1.5 hours, 2 hours amendments. Watch that and every sum will change accordingly. Not every, but wherever impact is there, that will change. Not necessarily impact will be at every place. May happen exceptionally that no change is made. Okay. Anyways, right now what we are learning? Finance Act 24. Amendment made up to Finance Act 23. AY 24-25 relevant to PY 23-24. Bus. Understand the position right now. So, when I talk about income, in income tax, when I talk about income, then that income can be earned from, welcome to this, 5 heads of income. Our next at least 10 days will be dedicated to this. Five heads of income. Heads of income means heads categories of income. So what are the five heads of income? Salary, house property. In this sequence only, salary, HP, PGBP, capital gain, other sources. Understand? Salaries, house property, profits and gains from business or profession, capital gains, income from other sources. Five heads. Okay. I will tell you some examples. You tell me, according to you, what do you feel that income will go in which head? I am earning a salary. There is an employer-employee relationship. There is an employer-employee relationship. Means Mr. Pradhan is employed with this college. So college is employer, he is employee. What happens? Salary. But Pratik Neve is earning professional fees, is getting professional fees from this coaching classes. Then profits and gains from business or profession. Okay, you have second house, third house, which you have given on rent, house property. And after 10 years, if you sell that house, capital gains. Because capital asset you are selling. Okay, and from whatever business income I earn, I have invested in shares of some company and getting dividend. You already know all the things. Income from other sources. You win the lottery of 1 lakh. Income from other sources. You go in Goa and play casino and win. Income from other sources. Getting it? You sell shares. You sell shares and earn some money. Capital gains. Slash lose money. Income includes loss. So it will be taxed and assessed under the head capital gains. Think. I'll tell you what it is. So how many heads? Five heads. Each head, each head, each head has some sections. So section for salary is 15 to 17. Of which act? Income Tax Act, of course. 15 to 17, only three sections. Three sections should be done in 10 minutes, na? But no, it will not be done in 10 minutes. It will need 2 days. Why? Because read with rules. Income tax rules also, na? So it is 15 to 17. House properties, see 18, 19, 20, 21 is deleted. HP is 22 to 27. PGBP is 28 to 44. Capital gain is 45 to 55. Capital gain is 45 to 55. And income from other sources is 56 to 59. Salary is, remember, today only 15 to 17. HP is 22 to 27. PGBP is 28 to 44. Capital gain is 45 to 55. And income from other sources is 56 to 59. Salary, HP, PGBP, cap gain, IFRS. Everyone should know this, huh? Five heads. There is no other option. This is your syllabus. And see, we have seen so many types of SSCs for you in your syllabus at intermediate level. You are only bothered with individual. That's it. That is the best part of it. You have to do calculation only for individual. Okay, don't take tension of company, firm, AOP, BOI, trust, cooperative society. Don't take anyone's tension. Focus only on individuals. But these five heads and all will be for every person. It will be same. But we should focus on individual. Rate of tax might change from entity to entity, and some provisions might change here and there. But our focus is on individuals at intermediate level. At final level, again you have income tax, 100 marks. So there you will have to focus on company, firm, cooperative society, charitable trust, all those. Here to only 50 marks. So focus on individuals. Okay, understood. Income tax has divided the income in five heads. What do you think might be the reason for this? Just to trouble you. So let's trouble students. Let us divide income in five heads. That is not the case. So what would be the reason for dividing income in five heads? Hmm? Different? Yes, that could be one of the reason. Different rates of tax. Then what else? Different receipt of revenue means you are close. Means actually what will be less? Okay. So okay. Similar answer. There could be different rate of tax for different type of transactions. So there is a special rate and there is a normal rate. Yes. What else? One main point you're missing. Main one point you're missing. The way of calculating income can be different. Way of calculating income can be different. I'll give you example. I'll give you this example. See, very simple example to understand, but interesting. And then after I tell you this example, maybe you will never like to do job again. Means you will feel no, we should not be employee. We should better do something of our own only because we don't want income under the head salary. We want income under the head PGBP. I'm not influencing your mind. I'm telling you facts. Okay, anyone I meet, I tell them, please shift your income from 15 to 28. What is 15? Salary. Means 15 to 17 is salary and 28 to 44 is PGBP. So we CAs when we discuss, we amongst friend when we discuss, so everyone is like, we don't want income in 15. We want income in 28. 15 means salary, 28 means PGBP. Why I'm taking first section's number means salary is 15 to 17. PGBP is 28 to 44. But why I'm calling first number only? Because that is charging section. Charging section means that section will tell that this particular income will be taxed in this head. For example, in salary, the triggering point, like in GST, the taxable event is supply. In income tax, in salaries head, the charging point is employer-employee relation. So as soon as there is employer-employee relation, income gets taxed under the head salary. So, and when employer-employee relation is not there, but still I am getting paid, then that will get shifted in PGBP. Okay, very deep. Now, why I am telling that I don't like 15? Even if someone says, "Ki I will give you salary of 1 crore," versus I can earn myself 80 lakhs. I will go for earning myself 80 lakhs instead of having salary of 1 CR. Why, you will understand. Why, let me tell you. Not what you can say, just giving you a comparison. Huh? Me versus my brother. Just giving you comparison because I am in 28, he is in 15. So we both purchased car on the same day. We both purchased car on the same day. Suppose 1st April 2023 we purchased car of 20 lakh rupees. I am in which section? My income is taxed in which section? 28. His income is taxed in which section? 15. Now see what happens. 20 lakh rupees of car purchased. First, let's see what happens in PGBP. It's a business asset. So it goes in balance sheet. Getting it? It goes in my balance sheet. Understand, you have learned GST also, but no ITC. Because ITC is blocked. Section 17(5). Otherwise, so that benefit also I would have got. But anyways, ITC is blocked. So whole amount including GST goes in my balance sheet. And assume it is 20 lakhs including GST. When I am calculating my business income, say which is, assume one figure 60 lakhs. From this 60 lakhs, I can minus depreciation on that vehicle. So 15% 15 is the allowed percentage. So on 20 lakhs, you calculate at 15%. On 20 lakhs at 15% is 3 lakhs. All of you got 3 lakhs. What is 3 lakhs? 3 lakhs is my depreciation. So depreciation actually is a good thing. My fees collected minus all expense was 60 lakhs. Now from that 60, I can minus that 3. So my taxable income, taxable PGBP will become 57 lakhs. But wait, I have taken this car on loan on which I paid interest of 2 lakhs in the year. Because initially interest is high. Then interest component keeps on going down. Initially principal is less, interest is high. So say first year I paid interest of 2 lakh. Interest can also be subtracted from my PGBP. Why? Because car is a business asset. So loan on the car, interest on the loan which is taken for the car is a business expense. So 2 lakh was business expense of interest. And then there was a petrol and there was servicing done. All this amounted to say another 2 lakhs for both of us. Huh? So I did an expense of depreciation 3 lakh, 2 lakh interest, 2 lakh servicing petrol, 7 lakh rupees. So friends, from 60 lakh, my PGBP means my taxable income went down to 53 lakhs. Forget 53 lakhs. Check, tell me how much my income went down by 7 lakhs. Because of this car, my income went down by 7 lakh. Income is taxable income. Means I must have saved tax on 7 lakh. If I wouldn't have purchased this car, I would have paid tax on. If I wouldn't have purchased this car, I would have paid tax on 60 lakhs. Because I purchased this car, I am paying tax on 53 lakhs. I have paid tax. I have saved tax on 7 lakhs. And rate of income tax for me when my income exceeds say 10 lakhs is 30%. So on 7 lakhs, I have saved tax at 30%. Whatever income exceeds 10 lakh, na, on that tax has to be paid at 30%. So I have saved tax of 2 lakh 10,000. Did you calculate? 7 lakh into 30%, 2 lakh 10,000. Understand one thing. From this salaried person who has purchased the car, who has filled the same petrol, same servicing, same interest on loan, will not get any deduction. So his taxable salary was 60 lakh, which will continue to be 60 lakh. Car will not make any impact because that deduction is not allowed while calculating income from salary. That deduction is allowed while calculating PGBP, not allowed while calculating salary. Did you get what happened? What happened? The just changing the head of income will change method of computation. Even if transaction remains same, the taxation impact will be different. If he was not getting that as salary, if my brother was getting this as professional fees, then for him also 7 lakh could have been subtracted. So whomsoever I meet, first thing I tell them that try shifting yourself from 15 to 28. Don't be in a relation of employer employee. Try to be in a relation of consultant. Getting it? So, and this was one example. Any expense which I do can be shown as business expense, provided it can be connected somewhere with business or profession. So it will keep on getting subtracted. So both salaried person and business person will probably do same expense, but salaried person will not get any deduction, such fancy deductions they don't get. They get one deduction, standard deduction, 50,000 rupees per annum. How much? So from his 60 lakhs of salary, he will minus 50,000. And I can minus whatever expense I do. What is better, you only decide. Now it is not about competition between PGBP and salary. It is about explaining you the point that in every head, what will change? The computation will change. Why computation will change? Because what deductions you can take will change. And deduction means always a benefit for you. In income tax, deduction is a benefit because we are taking deduction from the income, so taxable income goes down. So salary, HP, PGVP, cap gain, IFOS will have own set of deductions. So it will have own methodology of calculating income in that head. Over next 10 days, literally today is 21st, literally till minimum 30 April, our whole discussion will be of computing income from different heads. Will I have income from single head or multiple head? An SSC will have income from multiple heads. Why? Business income I might have purchased shares and I might be selling those shares. Means there will be capital gain. On those shares I might be getting dividend. So there will be IFOS. I'll be doing FD. On that I'll be getting interest. So there will be IFOS. I may have purchased a house on which I might be receiving rent. So there is HP. So I have PGBP, HP, capital gain, IFOS, everything. My brother also suppose does same transaction. My brother is just for comparison, for you to understand the academic point, no other thing. Okay, fictional character. Huh. So what happens in that case? He has salary, HP, cap gain, IFOS. Getting it? So one can have multiple heads. One can have multiple heads of income and will have mostly multiple heads of income. So see, when you add these five heads, five or any whatever heads you have, When you add income from these heads, what do you get? Gross total income. Please fix it in your mind. No other word you should use for it. GTI. Gross total income. Less, what is written less? Deductions under chapter 6A. Roman 6. That gives you total income. Total income means nothing but taxable income. And on taxable income, you will calculate tax liability. Salary plus HP plus PGBP plus capital gain plus IFOS will give you GTI. Gross total income. Gross total income minus deductions of chapter 6A will give you taxable income. But we will not call taxable income as taxable income, we'll call it as total income technically. Got it? Okay, this deductions of chapter 6A, they are given in section 80C to 80U. 80C to 80U. Eighty C to 80U. Can I scroll down? Achha, on taxable income you will calculate what? Tax liability. But do you understand that tax liability will come at, it will be as per some special rates and also at normal rates. On special incomes at special rate and on balance income at normal rate. See, I am sure in GST what happened? Day one we had done one diagram. A sold goods to B sold goods to C sold goods to D. And as we came to the last day, that diagram got more and more clear. Same thing will happen in income tax also. These things will keep on becoming more and more clear. Okay, so tell me once you complete till this point, then we can take a break after that. Lot of new things we have learnt. Understood till this point, all of you? Fine. So do it till this point. Take 15 minutes break. We will start back at uh 5 sorry 15 no, so 3:35 we will start. Okay, enjoy.